So if you print dollars to buy Bitcoin now, you probably help with the trade, the reshoring that they're trying to do, and you accumulate Bitcoin. And then over decades, if it appreciates, that gives you a lot of options should you face crises in the future. And then in addition, once Bitcoin is big and liquid enough, one of the ways to solve this dilemma between being the world reserve currency and being hollowed out is to in some way no longer be the reserve currency. Not that you want to cede that to another power, but that ideally you want to cede that to a neutral reserve asset. So gold got replaced because gold itself is too slow. Whereas Bitcoin has a chance of coming back into the system as that.
In a captivating conversation between renowned investment analyst Lyn Alden and podcaster Walker, the discussion delved into Bitcoin's transformative potential in reshaping global economies. Alden introduced a provocative idea: nations accumulating Bitcoin reserves not just as a hedge but as a strategic tool to balance trade, correct economic imbalances, and create new financial opportunities. Could printing dollars to buy Bitcoin be the radical solution to chronic trade deficits? Alden believes it just might be. Her analysis is more than theory, it's a wake-up call for investors, policymakers, and anyone monitoring the seismic shifts in global finance. Alden also examines Bitcoin's potential to evolve into a neutral reserve asset that could challenge gold's status and reduce the chaos of being the world's reserve currency. The implications are nothing short of revolutionary. If Bitcoin secures its place in the international monetary system, the ripple effects will be felt across economies, currencies, and global power structures. Lyn Alden doesn't just offer insights, she presents a blueprint for the future. Ignore it at your own risk.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Ironically, one of the ways that a country weakens its currency when they think it's too strong is to accumulate reserves, which they can then use later to defend their currency should they consider it too weak. I've written a lot about how the current structure of the dollar system, prolonging the strength of the dollar actually has some disadvantages. The way that it currently works, in order to maintain this big saleable currency that the whole world uses, it means the whole world, they all demand dollars, so they all have to get dollars. And how do they get dollars? For the most part, the U.S. runs a structural trade deficit and pours dollars out into the world. A lot of that is self-correcting in the sense that because the whole world needs dollars, there's a lot of demand for dollars. Above and beyond normal things that currencies trade on, which is like interest rate differentials, trade balances, things like that. So in addition to all those forces, the dollar has this extra layer of demand that other currencies don't have, and which sounds great, except for the fact that the cost of that is that basically the dollar is perpetually overvalued based on a lot of these things. And so our import power is really strong. Our export power for lower margin goods is fairly weak. And when you run that playbook for decades, and a lot of it is like a self-reinforcing playbook, then the downsides of that start to become politically front and center. So the reshoring and the hollowing out of the industrial base, whether you look at, if you're the DoD and you're looking at it from a national security angle, that's an issue. Or if you just live in the Rust Belt, and which is really shifted in politics lately, and it is responsible for some of the political changes we're seeing, the rise in populism. It's because of that hollowing out. So on one hand, having the dollar positioned how it is lets the government run bigger deficits than they otherwise would. Like right now, Brazil's having an issue because of their fiscal situation, even though their deficit as a share of GDP is roughly what the U.S. is. But they don't have this like entrenched, inflexible forward demand for their currency, so they're facing kind of immediate consequences for it. The U.S. really gets to delay those consequences, keeps the train going for a very long time, which if you're the government you like, and you can sanction almost any country in the world. So those are like the benefits from being the global reserve currency issuer. But the cost is you're exporting your industrial base to basically maintain that. That's kind of the ongoing cost of doing it. And during the Cold War, probably the trade-off was worth it. But now in the current time, as the imbalances have accumulated, the other things are front and center. So the average American says, I don't care if America can sanction country XYZ, I want my manufacturing job back. right? So the downsides are getting interesting. So ironically, a Bitcoin reserve is one of the ways that the U.S. could, start to balance out the dollar relative to other currencies, is say, we're going to accumulate a lot of Bitcoin. Should we later need to backstop our dollar, we have that option now. But while you're accumulating it, depending on the method of accumulation, that can actually be dollar weakening, ironically, which is, in the grand scheme of things, one powerful moving part in this whole trade issue. So I think there's more layers than people often talk about. If you merely say the Bitcoin we already have, we're going to put into a little stockpile, that's not going to meaningfully affect things. Then there's different mechanisms. You can revalue. There's a wonkish mechanism that they have in the Fed handbook that they can revalue their existing gold holdings and fill up the Treasury General account with that mechanism, which they can then spend. Or you could just do, change what the assets that the Federal Reserve can acquire, so they can do open market operations on gold. You could say that they can now do open market operations on Bitcoin, and you can essentially print dollars to buy, whether it's foreign, it could be standard things like foreign bonds, gold, or in this case, Bitcoin. And so a lot of, when you see a lot of countries with these really big current account surpluses like Singapore or Switzerland, or say the UAE that's pegging their currency but is running a big current account surplus, often they'll suppress their currency from getting stronger by printing their currency to buy a bunch of foreign reserves. So instead of the accumulated surpluses strengthening their whole currency base, it instead accumulates basically at the sovereign level. The downside of that is that the workers there don't get as much of the benefit of the surpluses that they're getting. And a lot of that accumulates at the sovereign level. So if you take it from an anti-statist argument, that's not great. But we're looking at how kind of currency differentials work. That is a mechanism that they can turn to, and that other countries often turn to. The U.S. doesn't. So if you print dollars to buy Bitcoin now, you probably help with the trade, the reshoring that they're trying to do, and you accumulate Bitcoin. And then over decades, if it appreciates, that gives you a lot of options should you face crises in the future. And then in addition, once Bitcoin is big and liquid enough, one of the ways to solve this dilemma between being the world reserve currency and being hollowed out is to in some way no longer be the reserve currency. Not that you want to cede that to another power, but that ideally you want to cede that to a neutral reserve asset. So gold got replaced because gold itself is too slow. Whereas Bitcoin has a chance of coming back into the system as that, because you basically have a settlement network and a reserve asset combined. But at a $2 trillion market cap, it can't serve that role yet. So if you accumulate it now, and then decades later, it's much bigger, and more countries naturally decide, hey, there's this settlement network / reserve asset that we can hold, and that starts to kind of work itself into the system, then the U.S. is well positioned with a really big chunk of that.
Lyn Alden explained that countries often weaken their currencies by building up reserves, which can later be used to protect the currency if it becomes too weak. She highlighted how the current dollar-based system, which maintains the dollar's strength, has significant drawbacks, most notably the need for the U.S. to run a structural trade deficit and inject dollars into the global economy. This creates a self-reinforcing loop, where global demand for dollars leads to the currency's persistent overvaluation. According to Alden, this overvaluation increases U.S. import power but hurts export competitiveness, especially for lower-margin commodities. She introduced the concept of a Bitcoin reserve as a potential solution, suggesting it could support the dollar during crises. Stockpiling Bitcoin, Alden argued, might intentionally weaken the dollar, making U.S. exports more competitive and helping to revive manufacturing jobs. Alden proposed that the U.S. should consider accumulating Bitcoin reserves, giving the government a valuable tool to stabilize the economy during future crises. Let's check out more highlights from her thought-provoking interview.
People often ask me, should the U.S. do it? It depends who you're at. On one standpoint, I want sovereigns to accumulate it last and have people accumulate it first. But I would rephrase that to say, whoever I'm advising, the answer is yes, you should accumulate Bitcoin. If you're trying to maximize the thing that you're advising, whether it's a family, whether it's a company, whether it's a sovereign, the answer is yes, try to accumulate Bitcoin and hold it for decades, because that will affect your balance sheet and your future value, literally whether you're a company, family, or in this case, a whole country for which the balance sheet does matter. Like part of what makes, say, Singapore attractive to invest in is that they have a ton of reserves that they could use to defend their currency should they need to. And there's lots of other countries like that. So that's certainly a variable that matters in terms of, currency long term. One of the biggest successes I've had with investing, and I've had a bunch of, downsides and wrong things too, but one of the biggest things I've gotten right is the fiscal side. So in addition to getting Bitcoin on my radar, the other big thing was basically getting the fiscal situation right, because that's what allowed me to expect inflation to come. And then, after some turbulence in 2022, it was what I started expecting to see. Okay, we're actually inflecting upward again in terms of economic growth and basically asset prices. I often like to say that I'm so bearish, I'm bullish, which is basically you're through the event horizon. It's kind of what fiscal dominance is. Like you're through the event horizon, and so some of the things start working in a different way. And the example that I often give is, so back in the the 70s, when they had structurally high inflation, the majority of that was from bank lending. So the rate of bank loan creation was pretty significant. Now, there was a deficit overlaid on top of that, but that was a smaller factor. And then, of course, there were factors like oil shortages that would actually translate that into, instead of just going to asset prices, it would actually go to consumer, price increases. So I would make a couple other observations that in any given big company, there are Bitcoiners, like at the vice president level, there's a lot of people like that in companies, and it kind of doesn't matter until they're majority, right? So like if you have like 9 board of directors and like 4 of them like Bitcoin, it doesn't really matter till you hit 5, unless the CEO or the one with disproportional voting rights is the one that gets it. So if it's Fidelity or MicroStrategy, you can be super early because it's top down, whereas bottom up inherently takes a long time, but then it's like gradually and then suddenly. And I still think it's going to be a minority of companies this cycle that do it out of of course, the thousands that exist. But they are popping up more frequently now. I think the accounting changes were a big deal. I think another thing is just seeing another cycle. So a point that I made before is that when someone sees like 3 cycles, not that there's been 3 cycles, but that they've seen 3 cycles, that actually matters. And for a lot of people, the first cycle they saw was 2017. And then, because most people have not actually looked at the logarithmic chart of Bitcoin, or they discount some of the earlier small cycles as irrelevant. But the 2017 cycle, the 2020/2021 cycle, and now the current cycle is kind of 3 cycles of higher highs and higher lows that are all in public, really, if you just discount those earlier cycles. And there's only so many times you can kind of say, well, that's a bubble, and then it's dead. Oh, that's another bubble, but that's only because of COVID money printing. And then it's like, oh, wait, it's back again, despite, high interest rates. You can only dismiss it so many times before you say, well, maybe I got to reassess. So I think that's another factor that's kind of mainstreaming it. And then I did a piece, I called it a new look at, what did I call it? A new look at corporate treasury strategy. And I analyzed kind of why this is relevant. And among assets that corporations can hold, there's kind of a hard cutoff, which is anything that you expect to underperform your equity, you can't really hold in scale. Like obviously you hold cash, even though it's going to underperform your equity because you need some cash. But you can't just like unlimited stockpile gold, because gold historically underperforms U.S. equities, ironically, roughly by the dilution rate that it is estimated to have. And so you have to kind of cross the threshold of like, okay, what is like an asset that is, going to equal or exceed your own equity, that's not another company's security. And Bitcoin is kind of the only thing at scale that has a shot at that. So it's not an accident that's the asset of choice that these companies are turning to. It's the only thing big, liquid enough, not a security, and then actually has attributes that make it a good treasury asset, at least for part of your holdings. Obviously, the volatility precludes it being too big. If you're running, if you're trying to run a certain way, you have to have cash as well. But
Yeah.
Is powerful. I think that's all super bullish. And the only thing that I'm not very bullish on is the U.S. government stance on privacy
Yeah.
anytime soon.
Yeah.
And I would like to see taxes removed on smaller amounts of Bitcoin transactions to improve kind of the flow of, Nostr and Lightning and in general, that whole space. So I wouldn't hold my breath on that, but I think all the big capital stuff is probably going to be pretty favorable. And including, like institutional scale Bitcoin collateralized lending, which might blow one of them up, but, I think that's all going to be part of the process of growing.
Lyn Alden highlighted that accumulating Bitcoin is a smart strategy for maximizing value, whether for families, companies, or sovereign nations. She pointed out that countries with significant reserves, like Singapore, tend to attract more investors. Alden also noted that within large companies, Bitcoin adoption gains momentum when supporters form a majority or secure backing from key decision-makers. She believes Bitcoin's unique attributes make it a valuable asset for corporate treasuries. Meanwhile, on February 3rd, a major shift occurred in the U.S. spot exchange-traded fund market, with Ether ETFs drawing more investor interest than Bitcoin ETF. Ether ETFs saw net inflows of $83.5 million, while Bitcoin ETFs experienced a significant net outflow of $234.57 million. Among Bitcoin ETFs, Grayscale's GBTC was the only one to receive inflows, gaining $8.02 million. In contrast, ARK and 21 shares, ERKB reported a $50.75 million outflow. Despite the withdrawals, the total net assets of Bitcoin ETFs remained at $19.14 billion. On the other hand, Ether ETFs showed impressive growth. Fidelity's Ether ETF led the way with $49.75 million in inflows, followed by Grayscale's ETH ETF and 21 shares, Ether ETF, which added $15.85 million, $12.75 million, and $5.19 million, respectively. This surge pushed the total net assets of Ether ETFs to $9.98 billion, nearly crossing the $10 billion mark. So, what do you think? Does Bitcoin have the potential to become a mainstream reserve asset for corporations and sovereign nations? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.